Hi there, you're with BQ Prime, and this is the fine print. The promise of seamless flow of credit was the biggest lure for India Inc. in the rollout of the goods and services tax regime 5 years ago. But ask any business today, it's become their biggest gripe. For the uninitiated, here's how input tax credit works. Businesses pay a tax on input goods they use in the course or furtherance of business. They get credit for this tax paid. And when they pay tax on outward supplies, the tax already paid can be reduced from the output liability. The aim is to avoid double taxation and ensure that the tax is paid by each entity only on the value added. To ensure that there are no leakages or loss of revenue for the government, the law has laid down strict conditions for who can claim input tax credit, what can it be claimed for, how to claim it, its reversal, reconciliation, etc. And on every step of the way, there is a possibility of genuine errors and interpretation issues resulting in ITC being blocked, leading to cash flow issues for businesses. On the second part of our special series on 5 years of GST, we're talking about the input tax credit pain and what can realistically be done about it. I'm joined by two gentlemen who have and continue to endure this pain, B.S. Parthasarathy, Vice Chairman at Allcargo Logistics and former Group CFO M&M, and Rajeev Dimri, Head of Tax Practice at KPMG India. Mr. Parthasarathy, Mr. Dimri, many thanks for joining us here on BQ Prime. Mr. Parthasarathy, to begin with, can you articulate some of the pain that you faced and overcame on the tax credit front in the last 5 years?
Thank you, Paiswini, for that question. And I just want to jog a memory when you came 5 years back and said, now GST is going to be implemented. Do you think it will benefit? And, there are all these mystics about it will increase GDP, it will increase tax collection, it will increase the country's productivity, and this is going to happen. So, as a very enthusiast and also an optimist, the people call me in the media side an eternal optimist. They said I was saying yes to everything. And they're saying, do you really believe as an industry person this is going to happen? But now we are 5 years hence and looking back. And while we'll go into the details of what you said, right, the credit part, I just wanted to kind of, start by saying that I think most of the objectives that were put as a macro is being achieved around a time when everything is subdued, right? There has been a contraction of business because of COVID. Many businesses are shut down. Many things have not been on this. But one thing you heard is that GST collection record high. Then they make a revision of GST estimate, and that is also achieved. So there is huge amount of positive momentum here. Okay. And the second one on the other side is that you are also seeing that productivity. Now, I've come to logistic industry. I'm saying actually the warehouses are being built larger. The warehouse parks have become a in thing. And now what was a one-off in Mahindra Life Spaces as Mahindra World City. Now, all cargo cities, are everywhere. Warehouses are, in many places, big ones. Okay, I've not had a look at all of them, but I'm sure I will very quickly. And they are giving. So huge amount of benefit which has accrued to government, to India Inc. and to this. And now we don't have to worry about tax-based system and then can go. Okay. Now coming to credit utilization. I'll just pause here, go back to you for question because I don't want to hog all the time.
No, I mean, I will take minimum time on this panel because, our viewers want to hear from you. Just give us a flavor, Mr. Parthasarathy, on, because there were a lot of transition credit issues, the legacy credit on the books of companies, and, a lot of them went to court. Can you articulate for us some of that pain and what it took to tide over, some of the challenges that you faced, let's say, if you're earlier avatar at M&M?
Yeah. Okay. So there are lots of credit utilization experience. We want it to be seamless. Yeah. And this is like a cricket ball which seems to have come off, so it wobbles a lot. It still delivers, right? Because the speed of the bowler is what is interesting. So it still delivers, but it wobbles a lot. And therefore, that's a wobble it is. It's not that system is broken or anything of that kind. And it leads to some, first and foremost is the GSTN portal functionality and performance. That leads to some bit of the credit utilization. Some of the problem relates to how that functions. Okay, some of this, and so many compliances to do, but like you rightly said, in order to protect and preserve the entire act in its fullness, there are a lot of complexity. So we are filing and more filing. Yeah, that is giving us a lot of headaches, and also it is the credit utilization is also lower. Uh, Compliances are being evolved to capture non-compliance, and this is an important aspect. When you create compliances to kind of capture non-compliance, the honest taxpayer is always the one who's chasing his tail. There are so many compliances to do that. Okay, so this is on a very broad level.
Sure.
You will at some point ask what are the actual bottlenecks of
I'll come to
seamless
that.
credit. You
I'll
come to that, but
yes.
I'm just on a higher level. That's what I'll stop.
That's helpful. Mr. Dimri, chime in here. I will ask you as well the specific challenges, but can you take a step back and look at sort of architecturally the design of the credit mechanism in the law, both, let's say, transition, utilization, and reconciliation? That do you see a fundamental error in approach here that every business seems to be grappling with utilization as of today?
So first and foremost, personally, the credit is the core to GST. It's like the soul of GST. And why do I say that? The fundamental premise of a GST, which was also the reason why India moved to GST, is that taxes, indirect taxes, should flow through a business and they ultimately must be borne by the consumer. Businesses must not bear any tax because that's what leads to cascading of taxes, etc. And therefore, an efficient credit system is the soul of GST. And therefore, any delay or fragmentation of ability to take credit will take us away from the core objective of why GST to begin with. And this debate took a long time. I mean, we've been debating this since 2009 or 2008 because original date was 2010. So we've spent an enormous time even before we implemented GST. Now, one of the first, sort of thing that comes in the way is the federal structure. And therefore, we talk of seamless credit, but are credits really seamless? They're not seamless because what I pay in state A, I cannot utilize in state B. And therefore, that in itself is the first fundamental flaw. But that as a country, because of our federal structure, we accepted that because it is definitely a step forward as to what a legacy system was. We had no mechanism of utilization of octroys and various other taxes. Excise duty was only in a manufacturing to manufacturing setup. And therefore, while this structure is definitely a huge improvement from a legacy system, but from a GST, pure principle of GST, do we have a fully efficient working mechanism for input credit? We don't. So one is structurally the point that you made that, because of a federal structure. And secondly, whether it is a transition credit, the fear that was created at that point in time, the amount of investigation that happened across in industry, it wasn't healthy. Today, if we look at one of the biggest debate is around input credits. There are delays in getting refunds and unnecessary disputes in getting refunds, even to exporters. And secondly, the law is making all kind of judgment as to what is a business expense. So if I am providing food to my employees, why is GST authority making a judgment whether that's a necessary business expenditure or not a necessary business expenditure? The company law does not make the distinction. The income tax does not make the distinction. So we have lots of these input credit restraints that are there. And therefore, that's a second level of restraint that is out there. And third, of course, forget the state taxes. Even central taxes, the excess pool that I have in state A, I cannot utilize that in state B. I think that's beyond what is given by a fundamental federal structure. And therefore, I do think that input credit is an area that still needs a lot of work. It is a huge improvement from our legacy system. I agree, and I completely grant that. But now we have to test it, not what it was 5 years ago, but how good is our GST system. I think that's where there is still a lot of work to be done. And remember, we still don't have real estate, petroleum products, and certain other things outside of GST, which is a further restraint to our input credit mechanism.
Sure. So structurally, you have pointed out that, from a very GST purist point of view, we are far more architecturally speaking, far more away architecturally speaking. We've come a long way from the legacy systems, but the distinct persons in different states being able to utilize GST across is one pain point, like you pointed out. Mr. Parthasarathy, there's a laundry list of asks from businesses on the ITC front, and I'm quoting here from a Deloitte survey. They did one after 5 years of GST. About 54% business leaders have urged the government to consider allowing conversion of accumulated input tax credit into tradable scrips. Another point that Mr. Dimri mentioned, cross-utilization of CGST credit across states and use of credit across entities in a group structure. On a day-to-day basis, can you sort of give us a flavor of the kind of issues some of these hindrances pose for businesses?
Sorry, Paiswini. So what is the question to me? You already given answers to
No,
that.
this is not the answer, sir. These are some of the problems that got articulated, by businesses. I'm trying to understand the business impact of this from you.
Yeah. So just I'll give you some of the things which issues for flow of credit, technical things. Okay. I asked my GST guy. So GST, the person who is in charge of the entire thing. So I said, what is that bothers you? And he said, claiming ITC based on 2A, 2B. This is to be or not to be. This seems to be the biggest problem that this this existential issue of availing credit. And then Rule 37 of CGST, not being rationalized. How 180 days you don't make a payment, and what happens? How do you claim credit? This seems to be a big thing. Tracking date of invoice within 180 days is not an easy case, and the supplier does not get the benefit who has already deposited tax. So this seems to be bothering them. Generation technical glitches on portal. This is a big issue. Every time there is a portal, then the returnee or the customer has to struggle to put that, and therefore that delays. And gap between 2B and 3B. So again, back to that same, that to be or not to be. Yeah. Okay. So I think either they should change the name of that form, or they should fix the problem.
Okay, so how to do that? Let me take that to Mr. Dimri to solve this to be or not to be problem. Mr. Dimri, some of the problems that I mentioned and some which Mr. Parthasarathy pointed out, are there any doable fixes for these problems? Ones that also sort of address the government's concerns on fraudulent claims on ITC or revenue leakages.
So, I mean, I agree with the points that Mr. Parthasarathy made, and I'm sure his GST guys are talking to him about things that really, really bother them. And this would be true for, vast majority of people. The core of it is that me and my suppliers' books will not always, on any given day, 100% reconcile. And therefore, that is part and parcel of the business requirement. The time of the purchase or the sale that is recorded by my supplier, the transit time, there are some returns, there are, some quality assurance issues, there's some negotiations that happen. Even under normal business environment, my books and my suppliers' books on any given day will need a reconciliation. And that was something that the finance guys would always do, because I have to periodically settle accounts, and this is something that will get done. Added to that is the dimension that now I have to reconcile it from a GST perspective on a monthly basis. And that has added a completely new dimension of compliance burdens to all the buyers. This goes back to the original discussion that happened, that if I, as a taxpayer, have paid my amounts and I've discharged whatever financial obligation, the consequences of my supplier not meeting their obligation, and some of it could be on account of actual fraud and guys disappearing, not paying tax. But vast majority is actually not on account of that. The vast majority is on account of that supplier of mine having some dispute with the department, which is inevitable, classification issue, valuation, or whatever. And therefore, that the compliance burden on me to be responsible for the entirety of the tax compliance of my supplier, I believe is an undue burden that has been placed on businesses. Because I, as a independent business doing transactions with Mr. Parthasarathy's company, have arm's length relationship. I will do my financial diligence. I will do my contractual diligence, but I'm not supposed to get into the daily life of his company and make sure that every transaction he reports is good. So that burden on me and that burden on entire corporate India, I think is more than what is anywhere else in the world. Combined with that, the glitches and the time that it is taking to stabilize the GST, and it is
before you come to GST and point, sir, I'd like to belabor on this point a little bit more. You said, this is the undue burden because let's say your supplier is not doing, or your vendor is not fulfilling what it should ideally. From just an administration point of view, it's easier for the government to, go after the bigger entity, which is, registered, which is sort of doing a business at a scale where there are not fly-by-night operator kind of issues that, 1 month you're here and, supplied, you've given fake invoices, you've not even supplied goods, and then you suddenly vanish. So from just an administration point of view, is there a balance to be struck between, the government's ease of administration versus the onerous, liability on businesses?
Well, it's an important question, and I'm sure different people will have a different point of view. Let me ask you. There are two things. I personally believe that at this point in time, this situation that we are discussing, which Mr. Parthasarathy described, I can bet, and he's here to confirm, that not even 5% of the dispute that he's having on account of this 2A, 3B reconciliation is the case where the vendors have disappeared and are fly-by-night operators, because I believe that most corporate India will have some level of diligence in who they deal with. And therefore, while I don't have while I don't have empirical data, but working with my clients, not even 5% of the issues are arising because of disappeared vendors. And therefore, for that possibility, can I rule out the possibility that there are these fly-by-night operators? No, I cannot rule out that possibility, and they will exist in every tax system around the world. But for that, is the GST primarily introduced for ease of doing business, or is it primarily been introduced for ease of the government? Now, that question, personally, you need to answer. Because right now, it is principally designed for ease of the government, not for ease of business. But the answer or the promise to the country was different.
No, of course. I mean, ease of doing business, and the government will also say from the top of their voice, is their priority. But of course, in the implementation, if the objective or the end goal is getting lost, that needs to be called out.
I agree. And therefore, the balance could be that, do I need to do this on a monthly basis? Do I need to do this on a quarterly basis? Do I do it once a year? Because today, it is my ability to take credit of the transaction that I have paid for is something that is solely dependent on the level of compliance of my supplier. Now, remember, 95%, and I don't have empirical data to say 95%, that's just my personal judgment in the matter, that 95% of the situation is not that I have a fictitious or a fly-by-night supplier. My supplier has his own disputes with the tax department. And therefore, it doesn't make him a fraudulent company. Tax disputes are endemic in our system. And remember, 90% of the tax disputes are won by the taxpayer. And therefore, let's not assume that every dispute, the government is right.
Would it help, Mr. Dimri, if we say that, and this is just one, let's say, procedural step that could compel compliance on the supplier side, that unless they file their GSTR1, which will then enable you to take credit, they're not allowed to file summary returns?
Well, again, how far do I want to get involved with my suppliers' daily compliance? I think most companies are doing it in the way saying, we will not release payment unless I get credit. So they're dealing with it commercially, which I believe is something that is in my control, rather than me getting, having a daily oversight with my suppliers in, compliance. I don't want to do that.
Sure. Mr. Parthasarathy, can you help us with some of your experience with tax administration when it's come to, some of the credit challenges that businesses face?
Yeah, I think, there was already a good mention by Rajeev, and that is all about what the challenges that is being faced. The key, there are two or three key ingredients with it in a principal basis. One, and I'm not answering your question directly, but just going back to the earlier question. Yeah. When you devise a tax on principles and then say, I want to fix every possible loophole.
Yeah.
And then what happens is it's like saying that I have to, make it enough so that the ball, if I'm a batsman betting in cricket, so the ball should not hurt me. So I pad it so much I look like I'm in armor. Then my running with the wicket suffers, and the sports suffer. Yeah. So in a broader sense, that's what it is. The principle we have to receive is, how do we deal with normal taxpayers, and if there are exceptions like IRS. Once they say that now I want to test you, how do we do? Otherwise, businesses can look after themselves, and they have methods of checks and balances. So that's one. The bigger issue that faces is recipient responsibility seems to be paramount in the new one, and in supplier of goods and services seems to be less of a carry. So we have to carry the recipient has to carry the entire ecosystem if he wants to get out of it. This is a principle, and there needs to be a thought around this to change. Yeah. So this is what we are finding, that they're saying, you want credit, so fix everything backwards. Then you can come and claim credit with me. Fix even the problems that I have, which is in terms of portal, etc., and get a benefit. Nowhere I'm trying to say that the system is broken. Okay. What we are talking about, a specific thing where my working capital now, which is stuck, is larger than ever before. Yeah. Pre to post, if I were to compare, one area where I'm a little worse off is the amount of working capital which is stuck. And that's real business impact over and above the impact of, what he said, a commercial decision. When we say, show us proof that you have deposited, etc., it has come to me credit in the system before I pay you. Think of what it is doing to the industry, that industry, in terms of working capital. So the entire ecosystem of working capital is getting thing. So this is the second, I would say, that one. Employee is a third one. It seems quite ridiculous in some sense that they are ineligible. That is an ineligible credit. The less rule we have, the more it is easier. Anyway, the neutral rate was to be earlier 14%, then they said it will be 15%. Now we are at 18%. So I know all this could be done with ease of doing business or simplicity. The more caveats you draw, the more is the complication. It's like calculating managerial remuneration. You have to have a very expert to calculate it, right? You can't just take the profit and say 10% is managerial remuneration, right? So this is complicated. So this is the one. And ITC should be allowed if suppliers RC surrendered, cancelled after issue of invoice. This is another bit of concern that are having. So dealing with authorities have been better in some sense. We are dealing with one authority rather than 27 multiplied by 2. Yeah. Okay. Earlier. So to that extent, there has been some advantage, but the disadvantage is that these are many things where they will also be, it is based on rules. So they will also be the assessment officer or the people at the other end. Yeah. Will also be very difficult. It will be very difficult for them to answer you. They said, I understand you, but can we go to the GST council? Yeah. Okay.
How understanding have the officers been in your experience, Mr. Dimri?
See, the the real environment assessment is to be done when the normal you file your return and then you get assessed by your regular officer. While we've had GST for 5 years, the assessments have just started for the year 17 and 18. Up until now, all the interaction with the authorities was on anti-evasion, and that is never pleasant. And in GST, it has been particularly been unpleasant because even today, every single investigation is done like a so-called raid, where people are held in office till 4 o'clock in the morning, 5 o'clock in the morning. Now, and I think that's a matter of perhaps training and reskilling the people. When you're dealing with somebody who can clandestinely remove goods, etc., you need to have those physical controls. But if it's a matter of you verifying their records, you don't need that raid kind of environment where you come in unannounced and people are then locked into office till 4 o'clock, 5 o'clock in the morning. And does this happen? It happens on a weekly basis. I get one client or the other who faces this. So to me, obviously, that anti-evasion is an environment that is never pleasant in any circumstances. What the industry has seen so far are these summons which the CEOs and the CFOs are getting from all across the country because everybody has jurisdiction. Center and state have jurisdiction over every tax. The real environment where assessments will happen is very initial stages. I think the first time when the proverbial, where the rubber hits the road is happening now, where the returns that have been filed for all this period of time, last 5 years, that is being assessed now. Early to say what that experience is. I think in next 2, 3, 4 months, when we start getting the assessment orders, that's when we will get to know what that real environment is. It is a very crucial time because the first level of GST positions are going to be tested now. Forget as many advanced rulings that we have and as many cases that we have. This is the time where the real tax-related assessments and the disputes, if any, will emerge now. And that's perhaps 3 months from now, we will know how to comment on the environment and attitude of the officers.
Mr. Dimri, since you mentioned that now the GST audits that are underway, are there any, let's say, are you figuring out that along the way has industry documented their side enough, or are there issues on that front where having to show evidence during the audit is also sort of a challenge, so to speak?
The initial inputs that I have, obviously, the companies are prepared with the data. The companies are prepared with their position, and position is largely on the input side credit, which is what we were discussing, also place of supply. One of the first set of questions that are emerging is, can a officer in state A demand information about my operations in state B, my tax positions in state B or all India? How does this jurisdiction work? Because I do business on an all India basis, but I am registered in multiple states, and that state is responsible and has authority over my operations in that particular state. So I may be manufacturing in 3 different locations, but I'm selling all over the place. How much do I need to share? And in what format? Because more I share, the assumption is that every officer in assessment will try and maximize revenue for that particular state. And if I'm a company operating in 15 states, can I end up having a situation where my total demand is 3 times my global turnover? Because the different people will try and attribute more to that particular state. That's a fear so far. I'm not saying that has happened. That's a fear because the questions that are being asked are far more than jurisdiction, what we believe is their entitlement for a particular state.
And is there no standard that's been laid down by, let's say, the CPIC to its jurisdictional officers yet?
Not yet. And remember, CPIC doesn't control all the GST officers at a state level as well. So it has to come from the GST Council.
Yeah. All right. Mr. Dimri, Mr. Parthasarathy, many thanks for joining us today with your insights on the mammoth challenge before both the GST Council and businesses to maneuver, the ITC it's become a minefield, because there is not just one issue or one entity that can fix it. And as Mr. Dimri pointed out, the bigger sort of challenges will now emerge as GST audits mature. Thank you for your thoughts, and thank you, Mr. Parthasarathy, for peppering them with literary and sports references. And thank you so much for watching. Stay tuned to BQ Prime as we go deeper into disputes, investigations, and arrests under GST in our next episode.